Every day, the global financial system powers wealth creation across the planet. This massive, borderless engine relies on a single foundation: systemic trust. Because trillions of dollars move through this network every 24 hours, it presents an incredibly lucrative target for organized crime syndicates and bad actors looking to exploit its sheer volume. The primary external threat they pose is money laundering, the specific process of taking dirty money derived from illegal activities and disguising it so it appears to be legitimate capital. If these bad actors succeed at scale, that foundational trust evaporates. Banks stop lending, investments freeze, and the resulting economic fallout can trigger a catastrophic collapse for ordinary citizens. The money laundering exploit has 3 stages. First, placement injects illicit cash into the system. Next, layering moves funds through complex international transactions to lose the audit trail. Finally, integration returns the funds as clean, legitimate assets. External criminals are joined by internal threats through market abuse. This occurs when insiders rig the system using non-public information to artificially distort prices for personal gain. These exploits are highly sophisticated and cross multiple borders in milliseconds. Defeating them requires a globally coordinated defense mechanism. At the top of this network are the international standard setters. In 1989, a G7 summit led to the creation of the Financial Action Task Force, or FAF. Their mandate is to hunt money laundering globally. Next, there is the Bank for International Settlements, which is based in Switzerland. It acts as the central bank for central banks, serving monetary authorities in their pursuit of financial stability. IOSCO completes this trio by architecting the core principles of securities regulation, ensuring markets remain fair, efficient, and transparent across different jurisdictions. These global bodies design the ultimate blueprints for financial defense. However, they lack the legal authority to make arrests or write actual national laws. International blueprints must be handed down to national regulators, who are responsible for translating these standards into hard local law. The United States divides these duties across multiple agencies. The Federal Reserve supervises and regulates banks, while the Securities and Exchange Commission, or SEC, oversees the securities markets. The UK uses a different approach, splitting duties between the Bank of England's Prudential Regulation Authority and the Financial Conduct Authority, which monitors the day-to-day behavior of firms. National regulators follow 2 philosophies. A rules-based approach relies on strict prescriptive checklists for high regulatory certainty. By contrast, a principles-based philosophy focuses on behavioral outcomes, giving firms the flexibility to design their own operating models. Regardless of the method, there is a physical limit to oversight. Regulators cannot watch every trade in real time, so they must rely on the institutions themselves to act with integrity. This makes private financial firms the active foot soldiers in this war. They are legally mandated to act as the first line of defense. Their primary weapon is customer due diligence, or CDD. These protocols are designed to verify exactly who a customer is and where their wealth actually comes from before a single dollar moves. The internal commander of this effort is the Money Laundering Reporting Officer, or MLRO. This individual is legally responsible for flagging suspicious activity and transactions to law enforcement. If the MLRO and CDD protocols fail to catch dirty money at that initial placement stage, the entire global defense network is compromised. This exposes an inherent flaw in the architecture. Regulators and compliance checklists are primarily diagnostic and reactive, often stepping in only after a risk is identified. Sophisticated criminals constantly adapt. They utilize emerging technologies to find new layering loopholes far faster than national laws can be rewritten. Reactive oversight and rigid rulebooks are insufficient to protect the system long-term. Maintaining the network requires a proactive human element. Internalized ethical culture serves as the ultimate defense against systemic exploitation, relying on the professionals who operate the machinery every single day. The CISI Code of Conduct provides a framework for this defense. It is designed to engineer trust through personal integrity, helping professionals do the right thing even when no one is watching. When the rulebook is ambiguous, a professional relies on a core checklist. Is the action clear and honest, avoiding half-truths? Is it impartial and open, ensuring everyone affected is aware of the consequences? They must also ask if the action is straightforward and transparent, and if the decision is informed and fair to all stakeholders involved. Global task forces and national laws build the heavy walls of the fortress, but the global economy is ultimately protected by the moral compass of the individuals standing at the gates.